Good afternoon. I'm Dr. Fasasi Kazim Adiola. We'll be looking at disposal of non-current assets, which is an important aspect of Introduction to Financial Accounting too. The first thing is, why disposal of non-current assets? Disposal of non-current assets, disposal of non-current assets, which we can also refer to as disposal of fixed assets, is prepared to determine profit or loss on disposal of tangible assets. Tangible assets are assets that are used to generate economic benefit. They are tangible, but they are not used for life. It gets to a point an organization must take a decision on whether an asset should be disposed. That is one decision. Whether the asset is now disposed at profit or at loss is another decision on the side of the accountant of the company. An asset can be disposed either at profit or at loss. An asset may be disposed to acquire another higher version of an asset, or an asset may be disposed if the asset is no longer needed in that organization, or an asset may be disposed when the asset has reached the end of the useful life. The asset may be sold as a scrap to another organization who may also need such asset. But our own objective of this topic is to know whether the asset has been disposed for loss or the asset has been disposed for profit. In that case, depreciation account will help us to know if an asset is disposed at loss or an asset is disposed at profit. In that case, what are those accounts that are prepared to know if an asset is disposed at profit or an asset is disposed at loss? One, we'll prepare asset account. Two, we'll prepare provision for depreciation account. Three, we'll prepare asset disposal account. And lastly, we'll prepare profit and loss account. These are the four major accounts needed to determine if an asset is disposed at profit or an asset is disposed at loss. We'll be looking at first illustration on disposal of non-current asset. Our first illustration will be on, let's look at this question. Amara PLC bought a van for 100,000 naira on 1st January 2015. The depreciation rate is 10% annually. The company has a policy to depreciate assets, to depreciate assets on straight line method. On straight line method. On 30th June, on 30th June 2016, on 30th June 2017, comma, the van was disposed for 85,000 naira. For 85,000 naira on 2017. Required prepare 1. Van account. 2. Provision for depreciation. Provision for depreciation. On van. 3. Van disposal account. And 4. Profit and loss account. Now, this is an illustration that needs solution. This is an asset. This is just one asset. The first thing we do is to say Amara PLC will prepare van account. Debit, credit. Please, this is van account. This van was acquired on 1st of January 2015. Let's assume it was acquired by cash. How much? It was acquired for 100,000 naira. At the end of 2015, this van is still existing. That's 31st 12. We say balance carry down 100,000. Because the van is still existing, the van is still what? Existing. In 2016, on 1st 2016, that's the second year, this van is still existing. Balance brought down 100,000. At the end of 2016, which is 12 months, the van is still existing. Balance carried down. At the beginning of 2017, which is 1st January 2017, the asset is still existing, 100,000. But on 30th June 2017, the van was disposed. Meaning, as at the end of 30th June, this asset is no longer existing in the book of Amara PLC. How do we do that? We'll go to the other side and put 30th June 2017 and we'll put the word disposal. And that is, we have write off the assets. Balance carried down shows that the asset is still existing. But as at 30th of June, the asset is no longer existing. The option is to put disposal as at 30th June to show that this asset is no longer existing. Now, the question is this. This asset has been used to generate economic benefit, which will mean profit. How much has Amara PLC set aside for the replacement of this van? In the first year, how much have they set aside while using this van? In the second year, how much have they set aside, which will mean as provision? In the third year, how much have they set aside? That will take us to provision for depreciation account. How much have they provided for this van? Provision for depreciation of van. How much has been provided? That is taking us to workings for depreciation. And this working is the policy of the organization to use the straight line method. The first year is 2015 of this asset. They said is 10% of 100,000, which will give us 10,000 naira. That's the first year. We'll come here and said 31st 12 2015. They have set aside a sum of 10,000 using straight line method from their profit. They have kept 10,000 for this asset. At the end of 2015, the total amount that has been set aside to date, which we call accumulated depreciation, is 10,000. Account close. This asset is still existing as at 2016. This, they will also set aside another what? 10% of 100,000 because they are using straight line method. And that is another 10,000 has been set aside. How do we do that? We'll come here, 31st 12 2015, brought down 1st 2016, balance brought down 10,000. This is from 2015 to 2016. Now, at the end of 2016, after the asset has spent 12 months from January to December 2016, this company have set another 10,000 aside using the straight line method. Meaning at the end of the second year in 2016, where this asset is still existing, this company, Amara PLC, has provided 20,000 from the profit generated from this asset. In that case, at the end of 2016, 31st 12 2016, we have an accumulated depreciation of 20,000. This asset is still existing at the end of 2016. That's 20,000. 20,000. Let's go to 1st of 2017. On 1st of 2017, the asset is still in existence, balance brought down, and there's an accumulated depreciation of 20,000. But this asset was sold June 2017, meaning this asset did not last January to December. How do we do this? In 2017, 10% is for per annum. And what does per annum means? Is from January to what? December. But this asset has been disposed in June 2017. How do we calculate the depreciation where the asset did not have a full year usage? This is an half year usage. In that case, what we are going to do is 10%, which is per annum, times 100,000 times January, February, March, April, May, June. That's 6 months. The asset was only used for 6 months. We are going to apportion 6 over what? 12. And I think that will be giving us 5,000 naira. In that case, what we only set aside in that year, which is 30th June, you see that it's not up to 31st again, is we are setting aside from the profit and loss is 5,000 naira. In that case, how do we do this? For the first year, they set aside 10,000. Second year, they set aside 10,000. The year of disposal, we were able to set aside 5,000 because the asset was used for only half year, giving us 25 what? Thousand. Meaning the total amount that has been set aside as at 30th, not at first again, 30th June 2017, we'll now come here and call it accumulated depreciation on disposal. Accumulated depreciation on disposal, 20,000 plus 5,000, that is 25,000. Account close. 25,000, 25,000. Now, we're moving to the main work. So I didn't clean the whole question for a reason. The next account to prepare is van disposal account, where we know whether this asset was disposed at profit or it was disposed at loss. Please, I need your attention here. We will go to the first account, which is van account. How much did they buy this van? The asset was bought 100,000 and it was disposed on 30th what? June. On what side here? On credit side. Do the corresponding entry. Look at where my hand is. 30th June 2017. This is what we call cost. The asset cost 100,000. From credit to debit. Go to the next account. How much have they set aside for this asset? First year they set aside 10,000. Second year they set aside 10,000, making 20. Third year they set aside 5,000. They have set aside, keep aside 25,000 for this asset. It's on what side? Debit. Take it to credit. That's 30th June 2017. We call it accumulated depreciation. How much have they set aside? 25,000. Meaning the company has kept 25,000 for this asset. And how much is this asset being disposed now? Look at it. On 30th June 2017, the van was disposed for 85,000. We'll come here. 30th June 2017. We call it sales proceeds. How much? 85,000. The question is this. This is it. Amara PLC, in practice, Amara PLC set aside from 2015 to 2017, set aside a sum of 25,000. This one they set aside is what we call provision for depreciation. Aside that, the asset was sold and they are able to realize 85,000. Let's add it together. What they make all together, that is a 100 and what? That's 25,000 plus 85,000. they're able to get 110,000 from that asset. What they set aside for this asset is 25,000 as depreciation. What they were able to realize when they sold the asset was 85, meaning all the total amount they were able to get was 110. And how much does the asset cost them when they bought it? The asset cost them 100,000. Meaning if they remove the amount they used to buy the asset 3 years ago, they will still have what we call what? 10,000, which we refer to as what? Profit. In that case, 25,000 plus 85 will have 110,000. 110,000 minus 100 we have 10,000. This is what we call profit on disposal on 30th 6 2017. Account what? Close. 110,000. After this, we'll prepare the last account, which is profit and a loss account. If we prepare this account, you see here, it will come to the income side of the P&L. This is the income side of the P&L. And we'll come here, 30th 6 2017. This is what we call profit on van what? Disposal, 10,000 naira. Now, we have come to end of this what? Illustration, where it has to do with only one asset. Only one asset. Well, we have another illustration on disposal of non-current assets, and this will be a very comprehensive illustration. Let's look at the illustration where two motor vehicle was acquired in 2 different years. But this question said the Nissan that was acquired in 2014 was disposed on 30th September 2016. Let's look at how we provide solution to this. This is the solution. Sami PLC. The first thing we are going to do is preparing motor vehicle account, which we refer to as the asset account. That's the first account we want to look at. How do we prepare this? Looking at it, the first vehicle that was acquired was Nissan on 1st of January 2014. We'll come here and say 1st January 2014. We'll assume that we bought the Nissan by cash for how much? 120,000 naira. Throughout 2014, no any other asset was acquired, not until 2015. We'll come to the same account and said up to 31st December 2014, we have just one asset, which is 120,000 naira. Account close for the year 2014. 120, 120. In 2014, this is the only asset that was acquired. Let's bring it down to 2015. That is 1st 2015. Balance brought down 120,000. In 2015 March, the Toyota was acquired for 200,000, meaning they have two assets now. On 31st March 2015, we'll represent that one too by what? Cash, 200,000. Meaning the total assets in Sami PLC at the end of 2015 amounted to 320,000. Account close. For the 12 months of 2015, the total value of assets in SAMI PLC amounted to 320. Taking to 2016, 1st January 2016, balance drawdown, they still have a total of two vehicles costing 320,000. But on 30th September 2016, Nissan, the first vehicle was disposed for 40,000. Meaning the first vehicle were no longer in existence as at 30th September 2016. Out of the two vehicles, one has been disposed. How do we do that? We'll come to the other side here. 30th 9 2016, we'll put disposal. The first vehicle now should be cancelled out, which is 120. When they bought it, it was on debit side. We have write it off. This account is to show how many of their vehicles are now in existence. They have two vehicles. One vehicle has been what? Disposed. You have to write off the one vehicle that has been disposed. That's why you have to bring the 120 here, not the 40,000 naira. Now, if you say 320 minus 120, as at 30th 9, 2016, you have balance carried down of 200,000. The 200,000 is representing the Toyota, which is the vehicle that is still what? Existing in the assets. That's the 200,000 Toyota vehicle. You close the account. That's the end of this account here. The next account is provision for depreciation account. And that needs serious attention. Provision, how much are they setting aside on this vehicle? We call it provision for depreciation of a motor vehicle. It is going to be at the end of the year, which is 31st 12 2014. In 2014, we are going to split it. This for Nissan, and this will be for Toyota. What do you want to do? We'll calculate depreciation for Nissan and also calculate, let's bring it downward, depreciation for Toyota because they have two vehicles. If it's three, you calculate. Mind you, they are using reducing balance method. In 2014, we are going to do cost, just the way we do during depreciation. In 2014, they have 10% of Nissan. That's 10% of 120,000. That will be giving us 12,000 naira. In that case, as at 2014, they only have Nissan. They don't have Toyota. We only set aside money for Nissan, and that is from our profit and what? Loss. 12,000 naira. There's no issue about that. We'll come here on 31st 12 2014, balance carried down 12,000 and close the account. 12,000, 12,000. Please pay attention to this. On 1st 2015, We have balance brought down 12,000. In 2015, using reducing balancing what method, we'll say 10% times 120,000 minus 12,000, because we are using straight line reducing balance method. 120,000, which is this, minus the previous depreciation minus 12, is going to be giving us cost of 108. How do we get that? 120 minus previous depreciation, which is 12,000. It will give us 100 and what? 8, which is the cost for the second year. And that is 0.1, that's 10% times 108,000. We'll be having 10,800. Mind you, that is for Nissan in 2015. The Toyota 2 has been acquired in what? 2015. And mind you, it was acquired on 31st what? March. In that case, we said Toyota in 2015, it was acquired in what? In March. And we are now going to look at March to what? December of that year. That is March, April, May, June, July, August, September, October, November, December. It was acquired on 31st of March. Its usage will start from April. That is it. If it's acquired in 31st of March, usage will start from what? April. That is April to December. Let's count. April, May, June, July, August, September, October, November, December. That is 9 months. It has 9 months usage in 2015. How do we do that? That is, we also say cost and depreciation. And now in 2015, it will be 10% of the cost of 200,000 times 9 divided by what? 12. That is 200,000 times 0.1 times 9 divided by 12. That is 15,000. That is 2015 for Nissan, 2015 for Toyota. The next thing is we'll calculate their what? Total. Total means Nissan depreciation plus Toyota depreciation in 2015. Nissan is 10,800. Toyota is 15,000. That will give us a total of 25,800. We'll come here on 31st December 2015. The total amount set aside for the two vehicles is 25,800, which is what they set aside for Nissan, 10,800 in 2015, and what they set aside for the new vehicle, for the new Toyota, 15. 15 plus 10, that's 25,800. Now, let's go to 2016. In 2016, they still have Nissan, but Nissan was disposed by September. Meaning it was only used from January to what? September. In that case, we'll say 10% of this minus this, 108,000 minus 10,800. We have 97,200. How do we get this? 108,000 minus the previous depreciation of 10,000, it gives us 97,200. But in 2016, this asset only spent January. Nissan only spent January to when it was disposed in what? It was disposed in what? In September. In that case, Nissan will not have a full 12-month year because you don't set aside depreciation for assets that has been disposed after that month. Now, in that case, if an asset was used from 30th of 2016 to September 2016, you only set aside depreciation up to the date of disposal. And up to the date of disposal is January to September. That is times 9 divided by what? 12. We'll now say 0.1, that's 10%, times 97,200 times 9 divided by 12. That is 7,290. Now, for Toyota, Toyota is still existing. Toyota has not been sold. Toyota will have a full 10% in 2016. In 2016, Toyota was used from January to what? To December. Using reducing balance, we'll say 200,000 minus 15,000. We have 185,000 times 10%. We have 18,500. What do we do again? We'll find the total in 2016. Let's find the total in 2016. In 2016, Nissan was 7,290 plus Toyota 18,500. We now say 7,290 plus 18,500. That will be giving us in 2016. The total amount set aside was 25,790. We'll come here. We'll first close this. 31st 12, 2015. Balance carry down. That's 12,000 plus 25,800. That's 37,800. Let's close for 2015. 37,800. 37,800. In that case, let's go to first 2016. Balance brought down 37,800. In that case, how much did they set aside now for 2016? At the end of 2016, up to 31st December 2016, the amount set aside, profit and loss, is 25,790, which comprises of both Nissan and Toyota. But mind you, Nissan has been disposed in 2016. The question now remains this: how much have they set aside for Nissan up to date? That's where you come here and add. This for 2014, this for 2015 using reducing balance, and this is for 2016. Let's add it together. 12,000 plus 10,800 plus 7,290. They have set aside a total sum of 30,090 for Nissan. How much have they set aside to date? Please, I need your attention. To date for Toyota is 15,000 plus 18,500. That's 33,500. Which asset is still existing? The asset that is still existing is Toyota. Now we are going to minus the total depreciation of Nissan from the whole overall depreciation. How do we do that? This depreciation has been what? Has been disposed. We will now come here on 30th June 2016. 30th September 2016. How much is the total depreciation? That's what we call accumulated depreciation on disposal. We are talking about Nissan. How much has accumulated? 30,000 and 90. That is it. Let's now find the total so that we'll know the depreciation that is remaining. We said 37,800 plus 25,790. That will give us 63,000. That's total depreciation of the two assets, 590. But let's minus the one that has been disposed, minus 30,090. We are going to be having a balance on 31st December 2016. We are going to be having a balance carry down. Balance carry down here stands for the Toyota of 33,000. That's 63,590 minus 30,090. We're having 33,500, which is the balance of the depreciation set aside for Toyota, and this Toyota is still what? Existing. We have prepared motor vehicle account, provision for motor vehicle. In that case, let's prepare motor vehicle disposal account. Motor vehicle disposal account. Very important. Now, when we say motor vehicle disposal, we are talking about Nissan. Not Nissan what? Toyota. And it's very easy. Once you can do these two accounts, it's very easy. Let's come here. How much did they buy the vehicle? 120,000. It's on what side? Credit side. Pick it from credit side to debit side. That's a 30th 9 2016. Cost. It cost 120. That's corresponding entry from the asset account. How much did they set aside for this Nissan? They set aside a total of what? 30,090. Corresponding entry from debit to credit. That's 30th 9 2016. We call this accumulated depreciation on Nissan. The total amount they have provided for Nissan is 30,090. 30,090. Now let's look at it. The money they have set aside for Nissan is 30,090. And the Nissan was what? Sold. What they are able to realize, they sold it for what? 40. Meaning the total amount they realized was what? 70,090 for a vehicle that they bought at 120,000. Just imagine, you bought the Nissan for 120,000. From the profit that Nissan was generating, you're able to provide depreciation. That's you set aside, that's what they call provision for depreciation. You have set aside 30,090 naira. And when you sold the vehicle after 3 years, you're able to realize just what? 40,000. Meaning the whole money you're able to get from that Nissan was 70,090 for an asset you buy 3 years ago for what? 120. Let's find the difference. 120,000 minus 70,090. That's a loss of 49,000. This is, if this is the total you what? You realize, and it cost you to what? To buy 15 years ago. It means you lost 49,910. Let's show it in the ledger. This 30,000 on 30th 9 2016 says the asset was sold for 40,000. The asset was sold for what? 40,000. Meaning 120,000 minus 70,090. As at this date, we are reporting 120 minus 70,090 we are reporting a loss of 49,000 49,910. How do we get it? 120 minus 70,090. We have a loss of 49,010. And after this, what do? You prepare the profit and what? And loss account. Profit and what? And loss account. Is on what side? Debit. You bring it to the loss side of the P&L. On 30th 9 2016, this is what we call loss on motor vehicle disposal. That's 49,910. And that's what. If you look at it, it's very easy to prepare. This is how we calculate the depreciation. This depreciation is, we are using reducing what? Balance method. Reducing what? Balance method. Now, what we have learned here is three things. We have learned how to calculate depreciation, and we have also learned that the depreciation we are calculating stands for the amount we are setting aside from our profit. Why? Because this asset that we want to dispose has been used to generate profit. And why? It's generating profit so that by the time we sell it and we need to buy higher version of it, or we need to replace the asset, it won't be difficult. But the purpose of asset disposal account is to know whether we are disposing at profit or we are disposing at loss. How do we know that? The total amount we set aside, which we know as provision for depreciation, for that asset is 30,090, and the asset was sold for 40,000, meaning what we have been able to realize from what we set aside from the asset and the amount that the asset was sold was just 70,090. It means if we want to even buy a new one of the Nissan, it's not enough to buy a new one for the Nissan that we bought for 120,000 3 years ago. It means for selling that Nissan, we have lost a sum of 49,910, which should be taken to the loss side of the profit and loss account. We have also learned how to use straight line method from the first illustration. And from the second illustration, we have learned how to use reducing balancing method under a disposal of non-current asset. Thanks for watching our video. We really appreciate our viewers, and we also appreciate our those who have been subscribing to this channel. We pray that for any knowledge you are getting from this topic, it shall be useful to you to pass your exam, and also useful to you to be an accountant that has background and knowledge of accounting from introduction up to the financial reporting stage. Thank you.